A very good evening to all. On behalf of the SARC of ICA, we welcome you for this study circle on professional ethics and code of conduct. Today we have with us a most eminent faculty, CAR Sundararajan, a fellow chartered accountant and a managing partner of Messrs. SRBR and Associates, a firm with more than 3 decades of practice and having offices at Chennai, Hyderabad and Cochin. A qualified information systems auditor from ICA, he specializes in the area of audit and assurance practice. He has been addressing almost all the branches of the SARC on the topics of bank audit, audit and assurance standards, accounting standards, tax audit, corporate audit, due diligence review, code of ethics, etc. A visiting faculty in the Institute of Cost Accounting and Company Secretaries, CAG, Staff Training Colleges of RBI, Indian Bank and Indian Overseas Bank. Has co-authored a book on bank branch audit released by CA Study Circle Chennai. Have been part of groups of ICA on various topics of professional interest on guidance notes revision, corporate audit, accounting and auditing standards, etc. Have been co-opted member of various committees of ICA Delhi and SARC on corporate laws, members in industry, CPE, etc. He has been a convener of Chartered Accountants Study Circle and has conducted many workshops, seminars, and annual conferences. He has held positions of Treasurer, Secretary, Vice Chairman, and Chairman for the International Fiscal Association, the Southern Region Chapter. He has been actively involved in Lionism and a regular blood donor and also a consistent contributor to social needs to the society. With these words, I introduce the speaker of the evening, CAR Sundararajan. Sir, the session is over to you.
Thank you, Mr. Krishnan. It was a nice introduction. Gives some expectation from the members. Don't expect much from the biodata because biodata is already available with the region. So from that, they have been able to respond to it. Can I share the screen now?
Yes, sir.
Yes, sir, please.
Just confirm whether it is visible.
Visible, sir, visible. Yeah.
Okay. So I thank the SARC and particularly Mr. Krishnan for introducing me and SARC for giving this opportunity. See, basically, they wanted to be to discuss on code of ethics, code of conduct, and professional ethics for the members on the recent developments. So the point of discussion today will be more on practical side of it. I don't want to go into the theoretical side of this Code of Ethics 2019, which is very much available with the members by way of literature through the institute. Before going to the subject per se, I thought of going to a particular word of caution, which I find it very, very important. This is not said by me. This is said by B.R. Ambedkar Saab, who said, wherever there is a conflict between ethics and economics overrule. This has been the rule of law. And those vested interest people will not come into the picture unless they are forced sufficiently. There are two angles. One is economic side, another is ethical side. Vested interest will always be looking for the economic development. But whenever there is an economic development which has to happen, I will be under compulsion to violate certain level of code of ethics. And the vested interest will not be interested in binding by these rules unless there is a sufficient force to compel them. This is what Dr. Ambedkar has said. And exactly these words has gone into the eyes and ears of various rule makers, and the need for code of ethics is there. Because if there is no formal code of ethics, literally, there will not be any organization methodology to rule the people who have been supporting the economic development. Of course, this is a word of caution only. I don't say that this is applicable to all the members or this is applicable to all the business people. That is not the intention. But the point which I want to drive home is when there is a conflict between ethics and economics, always economics looks for overruling. This is the thought process which Dr. Ambedkar has said, and that we'll be following it up in future also. The coverage today, I am structuring the coverage in like this manner. One is this new requirements of code of ethics, a recap, because it's already 2019, it has been introduced. Now we are in 2021. Many of us would have gone through the specific areas. So I thought it will be a new recap. I will not go into the entire provisions literally because our members may understand that this subject is so huge that 2 hours is not sufficient to go through that. So I'll be going only through the critical recaps of new requirements. And the other item is basically developments at ICAI There are lots of developments after the Code of Ethics 2019 has been introduced, and before that also. That I will be going through that. Technical standards. Basically, my dear friends, all of us know Code of Ethics is on two sides. One is on the professional statements and other ethical conduct. Let us not discuss much about other ethical conduct, which is very less in number. We are more interested, being the members in practice as well as for members in industry, we are more interested in Code of Ethics towards practical application of our knowledge. So for which technical standards which are critical has to be followed in a proper manner. Once technical standards are properly followed, I may not be having any issue on Code of Ethics at all. And the next slide is going to be on disciplinary cases, procedures. Because Code of Ethics, obviously, if the Code of Ethics is not properly followed up, I don't have any issues at all. If it is not followed up properly, definitely I, as a member, end up with some disciplinary case. Once I'm ending up with a disciplinary case, I need to know what are the procedures which are available. That I have a couple of slides for discussing. And then this is the practical side of it, recent developments and cases. What are all the cases and developments which is happening in the recent time as far as Code of Ethics and discipline issues are concerned? We would like to mention, my dear friends, these are not exhaustive lists. These are some practical lists which is happening. Why I am taking up certain recent developments and cases is basically the members feel that Code of Ethics, discipline cases and all, it is only at the higher level, it is not at the smaller level. But the cases which I am going to discuss in this recent developments and cases are basically which is applicable on a day-to-day basis for small and medium practitioners. Need not be large practitioners, small and medium practitioners themselves. Once you go into the cases, probably you may be able to appreciate it better. And then COVID-19 continued relevance. Even though COVID-19, now we are in 21, 2 years is down the line. But the problem is, it has still an effect on the financial statements of various corporates which we are signing and also non-corporates to some extent. So there is a continued relevance as far as COVID-19 is concerned. How it is relevant, once again, having an effect on class 7 of schedule 2, which I will come to that in that particular slide. And then FRRB findings, once again, my dear friends, FRRB findings is only in respect of large corporates where the financial reports review board go through the information and quality review is also happening, but all these things are only in respect of large corporates. But what happens is, whatever they are observing in large corporates are also applicable in respect of small corporates and also non-corporates. I am just explaining to you certain common omissions in financial statements and COROs, which will be in FRRB findings. And the last but not the least, I am going to talk on certifications, because whenever I talk on Code of Ethics, people tend to relax a bit, assuming that this is not having a specific relevance to them. But what happens is, the certifications, which day in and day out, the new chartered accountant who have qualified day before yesterday is also signing a lot of certifications. And very, very senior chartered accountants are also certifying, giving certain certifications. So the certifications is a critical area where each and every chartered accountant is attracted. So in that situation, we have to take necessary due care, because wherever I have been addressing few associations and few organizations, their members comes and say, sir, is it having a direct implication or not? Let us understand very, very clearly. Institute will not make this compulsory to attend a disciplinary, code of conduct class at least for 2 hours in the entire 20 hours requirement of continuing professional education. 2 hours is compulsory required for Code of Ethics. Unless and otherwise, this is so very important. The institute also is not a organization which will be forced anything on thrust on any of these people. So certifications, day in and day out we are doing. I will come to that particular slide, which will be having more explicit. Mr. Krishnan, you can tell me whenever there are some queries which are popping up in the chat box, if at all it is there, number one. And if I am going a bit fast, you can tell me so that I can reduce the speed. So this is the item, I say Code of Ethics 2019. Of course, this is Code of Ethics has been available from a very long time. And this Code of Ethics 2019 is once again from the International Ethical Standards Board. From that, we have brought in and we have taken some requirements which is suited to the Indian environment. And these are the new environments which have happened in 2019. I'm going to touch upon a few items only. It's more of a refresher. I'm not going to go into this entire Code of Ethics 2019. I am going to touch upon only the few additions which has happened, which is very, very critical. and what is the reason for that, so that we will be able to see the entire perspective of this code of ethics in a proper shape. My dear friends, one important problem with a Zoom meeting or webinars is I'm not able to see you physically. I'm not able to see your reaction in a proper perspective, and I can't understand whether whatever I have communicated has reached you or not. This is a disadvantage of this electronic media, visual media. I will be throwing out whatever my points available with me. You can have an interaction at the end of the questions, end of the session by way of Q&A, or you can send a mail to me subsequently. My mail ID will be shared through the presentation. From that, you can do that. That is the only way which can serve. My intention is to ensure that whatever little knowledge I got in the code of ethics, I will be sharing with you. From this, you may be able to pick up certain things, and if you can throw some more light on these points, I'll be too very happy to strengthen my thought process also. So what are the new requirements as far as Code of Ethics 2019 is concerned? There's a new section which is on 540, which talks about long association of personnel. Whenever there is a long association of personnel involved in a corporate where you are doing the audit, assurance functions, the concept is wherever you are having an assurance function, the personnel, if you have a long relationship or long association, there is an element of threat which can happen. There are only 5 threats which has been defined by the code of ethics. I will go through those 5 threats, but my point is this long association of persons will have an independent threat. This is what the concept. So they have explained about what do you mean by long association of personnel in section 540. The next section which is important is section 600, which is non-assurance services to audit client. So wherever you are having an audit client, you are not supposed to do non-assurance functions. This has been available in the Companies Act 2013 also, wherein they have said that a statutory auditor should not be doing any management audit services or management assurance services. Same thing is brought in the Code of Ethics also. So wherever you are having an audit client, you are not supposed to do any of the non-assurance services. Simply something like tax audit service, tax advisory services, management consultancy services, internal audit services. A statutory auditor cannot be an internal auditor. A statutory auditor cannot do any other advisory services by way of creation of accounting, maintenance of accounts, etc. Companies, corporate secretarial services, you are not supposed to do. We are not supposed to give opinions, because all these things may have an effect on the self-review threat and independence threat also. So we are supposed to do, once you are an assurance auditor, you are not supposed to do any non-assurance services to the audit client, section 600. There are some relaxations which is available that I come subsequently, but for a moment let us understand we are not supposed to do any non-assurance services wherever we are having an audit services with the client. Next is key audit partner. This is a very, very important concept which has been brought in context of partner rotation, because the client itself is requiring a rotation of auditors. In case of listed companies, rotation of auditors is required. In case of unlisted also, after a particular situation, there may be some requirement. But whether there is retirement or rotation of companies or not, rotation of partners is also relevant, for which they are bringing in a definition of key audit partner. Who is a key audit partner? The engagement partner is the individual responsible for the engagement quality control review and other audit partners, if any, on the engagement team who make key decisions or judgments. Point is, if I am the partner who is in charge of a particular audit and no other partners are getting involved, I will be the key audit partner. But I am the engagement partner. I'm going to certify the financials, but there is another independent partner who is in charge of GST functions in my office, who comes and gives the specific key decisions or judgments in respect of the GST issues. He will also becoming the key audit partner. So wherever the financial statements in which I am going to give an expression of opinion, and any other partner along with me who is going to give some key decisions and judgments, both of us will become as a key audit partner, which is what is defined in the new Code of Ethics 2019. Relative, now they have given a specific definition. As far as corporate clients are concerned, relative is as defined in Companies Act 2013. In case of other than corporate clients, relatives are immediate family as well as close family. Both are reckoned as far as other clients is concerned. For example, I am going to audit a non-corporate firm, a partnership firm. Even if my direct relative is not there, even if my close families are there, it will be considered as an interested party. So independence threat will happen. What do you mean by immediate family and close family? They have defined. Immediate family is a spouse, or equivalent or dependent. This is what they have mentioned, a spouse or equivalent or dependent. Probably equivalent, I don't know, they are talking about living together arrangement. Let us not go into this particular area, but a spouse or a dependent is considered as an immediate family. And what do you mean by close family? A parent, child, or sibling who is not an immediate family member. For example, I cannot do an audit of a firm where my father is a partner, my brother is a partner, my son is a partner, my son is a director. All these things are not applicable in respect of non-corporate organizations. Even in this case of societies and trust also, it is advisable to keep ourselves away wherever a key person who is in charge of that particular client is our either immediate family or close family. So relatives has been defined as far as corporate or clients are concerned. What is relevant in Companies Act 2013, the same relative concept will come. In case of non-corporate societies and other cases, immediate family or close family, if there are any persons available there, then we are restrained from doing the assurance functions. Once again, non-assurance functions, there is no problem, which means giving an opinion or filing certain returns or making some papers ready for them or statements, RBI compliances, whatever it is, it's not an issue. An assurance function, the reason is whenever I am signing a financial statement on behalf of a company or a client where I am interested, I may be having an independence threat and I will be signing financial statements on dot. It's a perception, signing on the dotted lines, which the other person who is reading the financial statements will get an opinion on the basis of the financial statements. He should not be misguided. That is the intention for which they have brought in the situation of relatives and cases where relatives are the partners or directors. I'm not supposed to do the assurance function. Audit function or assurance function should not be taken. Non-assurance function, there is no restriction at all. Responding to non-compliance of laws and regulations, there is one more important, very, very important development in 2019 code. What has happened is, in respect of any organization or audit function which you are taking, corporate or non-corporate, any non-compliance of any laws and regulations, I am supposed to give a report. In the audit report, we are supposed to say this particular client has not done any non-compliance of any laws and regulations of the nation. The disadvantage is today's position, even the Ministry of Law will not know how many laws are available in Indian situation. How many legislations are available, we don't know. When you are walking across a particular road, you don't know how many laws you are violating. The problem is we don't know how much of laws and regulations are there. But let us be practical. Whenever you are doing an audit of a particular company, the company, if you are doing an audit of a construction company, we are supposed to go through the provisions of direct tax law, indirect tax law, RERA, probably RERA. In case of an organization which has an impact on pollution, for example, a chemical industry you are doing, you have to go to the Pollution Control Act also. Like that, whatever be the act which is applicable directly to the company, you may be looking at that. But this particular no clause provision is very, very dangerous. It's very, very tough for the professionals to follow, because how many laws compliances you will be saying? You will be saying you are giving a specific undertaking. In the earlier occasions, wherever there is a non-compliance, we are supposed to report. Now what is expected is there are no non-compliance as far as laws and regulations are concerned. We are supposed to give a declare an opinion. Fortunately, this has been deferred. I will come to the relaxation portion subsequently. But anytime this is going to come, we are going to have a serious problem as far as profession is concerned. We have to depend on our own knowledge base, and we have to depend on what will be the guidance note institute is going to give it at that point of time. But the point is, this no clause regulations is going to come. If not today, at some point on it is going to come. We have to be very, very clear and firm how it has to be overcome. They have also given what is management's responsibilities that they have explained in Code of Ethics 2019, because any financial statements you are going to give an assurance, or even certification which you are giving an assurance, the responsibility of the management is to prepare the statements. We are not supposed to prepare the statements. They are supposed to prepare the statement or certificate or the table which I am going to certify. Those things have to be prepared by the management. It is their responsibility to prepare that according to the laws and regulations. I'm only supposed to certify. As an auditor, we are only supposed to certify that the statement which has been given by the management is reasonable and correct, or true and fair, as the case may be. There are certain places where we are giving as true and correct also, like Form 3CD, we are giving it as a correct view. But in as far as financial statements concerned, we are giving it as a true and fair view. but the preparation is of the preparation responsibilities of the management. This is what has been explained in Code of Ethics. Requirements listing audit team members and key audit partners from being compensated for providing non-assurance services, which I already told you. Even the company should not be paid. The company cannot be hired for non-assurance services. Even the audit team members or key audit partners are also not supposed to be compensated for providing non-assurance services. For example, if I am the auditor of a company, a person in my office who is in charge of FEMA compliances, he cannot do a service for my client where I am doing the assurance functions and say that he is independent, he has taken the non-assurance service fees, which is wrong. So there is a restriction very, very clearly. Wherever you are having an assurance functions, this client, neither you have to take a non-assurance fees, nor your audit team members should take fees, and key audit partners also should not take any other fees. Leave on the firm as it is. Next is requirements and applicables, guidance address institution as a result of merger and acquisition, an entity became a related entity. See what happens is today I am the auditor of A Limited. There is another organization called B Limited, where my father is a partner director or my brother is a director. Once A and B are getting merged, AB Limited is forming, I am not supposed to do an audit function, because once it's a merged entity, I am interested in that merged entity because one of the directors is becoming my related. There is a guidance which has been given in the Code of Ethics 2019, wherever merger happens, how it has to be evaluated and how it has to be decided on the interest and relationship, which is also given in the Code of Ethics 2019. There is a provision which is available in respect of threats which are created by way of certain tax services. Example, for a company, whether they are eligible for a benefit under additional taxation, additional depreciation, or they are eligible for 80IB deduction or any other deduction as the case may be in respect of SEZ provisions. I myself give an opinion. For example, a company is having an activity in SEZ and they're also having an activity in SEZ which is being an indirect export, whether I'm eligible for that benefit or not. If I give an opinion, obviously when I'm sitting as an auditor, once I give an opinion, I give an opinion that is exempt from tax. And when I do the audit, definitely there's a threat called self-review threat, because I myself is giving an opinion. On the basis of the opinion, I am going to finalize that. Once I am having a difference of opinion at the time of signing the financial statements, I will be under a dilemma whether I can overcome the opinion which I have earlier given, or I am supposed to go with the opinion. There's a problem which is going to be a self-review threat. So provisions relating to threats created by certain tax services is being brought in the Code of Ethics 2019. Another important development is wherever your gross professional fees in respect of one particular client exceeds 15% of the total fees of the firm for 2 consecutive years, you are not supposed to continue with the assurance function. The reason is basically, once again, over dependence. Dependency threat, independence threat will come, because this will not be applicable in respect of certain provisions, which will come in the separate slide. But there is a provision wherein the requirement, you are not supposed to get more than 15% of the total fees of the firm from one entity or the related one client or the related entities of the particular client. Independence requirement for included for assurance engagements. How independence has to be maintained, that has been given. Auditor rotation requirements under various local regulations has been provided. Apart from the Companies Act regulations, there are also auditor rotation which is being given. Effectively, all these requirements which have been mentioned is in respect of self-review threat, self-advocacy threat, and conflict of interest. These are the 3 main focus when they even decided on this new developments or new requirements as far as Code of Ethics is concerned. So let us go into the various threats, which are the reasons for making this Code of Ethics, the purpose and objectives. Basically, the purpose and objectives of Code of Ethics and new provisions is to overcome and mitigate the threats. Obviously, my dear friends, any control threats can never be totally removed. It can be only mitigated. Same way, the 5 threats which has been perceived by the institute and also the corporate world is only can be mitigated to some extent. It cannot be totally eradicated. Let us go into the 5 threats which is going to be discussed on this. First is self-interest threat. What do you mean by a self-interest threat? So when in a corporate audit, I myself is a shareholder in the company. Obviously, there is a direct financial interest in the client. I myself is the shareholder, or I have given loan to the company also. It's also there is a financial interest, or I have borrowed from the company. You all of you know that in the corporate law, it is very, very clear that if I have invested more than 1,000 rupees, I have a loan of more than 1,000 rupees, I'm not supposed to do an audit. The same thing is applicable in respect for non-corporates also. Once you give a money to the company or take money in the company, self-interest threat will automatically come into the picture. Quoting a low fee to obtain a new engagement. This is basically earlier, it was coming under the undercutting of remuneration, which was specifically barred by the institute. Now it is not barred, but only thing is the threat has to be overcome. You have to justify. For example, if a company is taking up the audit for a lakh of rupees, where the earlier auditor is going to have been charging 5 lakhs, I should have a justification. What are the things which I am not going to do? What are the things which has been earlier done by the other person? What is the difference? That review has to be done, and I have to give a justification for reducing the or quoting a lower fee. Close business relationship with the client. Close business relationship which whenever you are dealing with the same company. For example, I am the auditor. I also have a business activity in case of a private limited company where I'm only not signing the director, but I'm a what do you call? I can say as a director, director simplicitor. Whenever I'm a director simplicitor, but that company has transactions with this particular company. For example, I'm going to a company called ABC Limited, who is in construction activity. I am the auditor for ABC Limited. But one of the companies where my son is interested or my brother is interested, who is going to do subcontracting for that company, obviously there is a business relationship with the client. We can very well ask, for example, I am having a client who is doing construction activity. If I go and purchase a particular flat, am I having a close business relationship with the client? Obviously not, because one-off transactions by way of purchase of a property, which is anyway he is going to sell it off to somebody else, I am going to buy it off. Then there is no close business relationship, provided the rate at which I am purchasing is not at a compromised rate. When everybody is getting a property at 10,000 rupees per square feet, and I'm going to get the same property at 3,000 rupees per square feet, definitely there is a self-interest rate which is going to happen. So please be very clear that the close business relationship with the client does not mean a one-off transactions, but it is a transaction which is they are going to have on a daily basis, either you yourself or by way of a partnership firm or a company, which you are indirectly interested also. Access to confidential information that may be used for personal gain. Wherever you are doing an audit of a particular company, you get access to certain information. Obviously, there is a non-confidentiality threat which is there. I am given privy to a lot of information by the company to do my own assurance functions. If I misuse that by using this confidential information for personal gain, definitely it will have a self-interest threat. So please understand these 4 threats, which are in the example by way of direct financial interest, quoting a low fee, or close business relationship for the client, and also access to confidential information that may be used by you as a personal gain. All these things are self-interest threat. So we have to find a way out. If there is a self-interest threat in any of the clients which you are doing, we have to ensure that it is how it is being overcome or how it is being mitigated. The next threat is very, very important threat, which all of us will be undergoing in any of these actions points as far as assurance function is concerned. Issuing an assurance prospect on effectiveness of operation of financial control system. All of us are signing in case of a corporate IFC report, internal financial control reporting. What we say is the company has a system of internal financial controls which are very much in fairness, correct, and risks are being managed. We are giving a report. That report we can give on the basis of the management certification how the internal financial controls are there. Example, I'm telling you for a classic example. My dear friends, don't get boredom by the examples which we say. I always feel and understand that when I give an example, it can easily register in your mind. That's why I give examples. For example, I'm going to take up an audit of a non-banking financial company. In the non-banking financial company, whenever they give loans to what you call second-hand machinery or second-hand vehicles, what are the risks which that's available, how that risk is being mitigated, how they are overcome by way of verification of the control. For example, if they have a second-hand lorry which is being financed and they are financing to the extent of 10 lakhs, whether the lorry is having a value beyond 10 lakhs so that they will be able to recover. What are the systems they are creating? That they have to prepare it for way of an internal financial control reporting. Same way banking transactions. Whenever a banking transaction happens, many organizations has an impact of up to 1 lakh they will have with one signatory. 1 lakh to 10 lakh they will have 2 signatories. More than 10 lakh the management side will sign the financial statements. This is a classic example of a proper operation of financial statements. If they have a system like that and they give us a certificate that this is happening, on that basis the internal financial control systems are strong. I can give a certificate. The problem is, I myself prepare a control system like this. You do like this, you do like this, you do like this. You prepare a system and give it to them. On the basis of same system, if they are following, I am going to give a report. Obviously, that's a self-review threat, because I give an opinion. If you do like this, your controls will be perfect. So when I sign the financial statements or financial control reporting, I am supposed to see whatever I have given is already by way of a manual. If I have prepared the manual, and that manual I am going to depend on when you are going to give an assurance functions, obviously there is a self-review threat. Same way, preparing original data. Unfortunately, many chartered accountants take the case of account bookkeeping of the client also. In case of particularly non-corporates, bookkeeping also they take it up. They do the data entry into the books in the tally, prepare that, and on that basis they prepare the financial statements also. Once you prepare the books of accounts, you are not supposed to do the assurance functions. If you don't prepare the books of accounts, you can take it. The reason is, once you prepare the financial statements, obviously you will be having a self-review threat. Not only the books of accounts, even in case of a certification. For example, they are asking us to give a certification in respect of net worth of one particular company. You yourself prepare the data and prepare a net worth, and you yourself sign. What will happen is, you are not having an independence to see what is being given by the client independently as original data for net worth. You are certifying your own statement. Obviously, there will be a self-review threat. Same thing is applicable in respect of opinions given in respect of taxation issues. Let it be GST, or let it be direct taxes, or let it be in FEMA also. Once you give an opinion, on the same opinion you are going to use it for assurance functions, obviously there's a self-review threat. Important threat, which is definitely has to be examined. Third important threat is advocacy threat. It is not uncommon. I don't say it is common. It is not uncommon to promote a client. For example, I have a client who is having event management activity. Whenever somebody is coming and asking, do you know any event management people, I immediately give a reference to them. Giving a reference is not the point, but the point is, I go into various places and say, see, Mr. X, Mr. Krishnan is an advertising person. You utilize his service. I go and give it to various people, which is wrong, which is basically an advocacy threat. What will happen is, you keep on promoting the interest of the client with the various clients. Obviously, there will be a quid pro quo requirement between you and the client. The client will be under compulsion to pay you a referral fees, which is obviously restricted as far as institute's regulations are concerned. Otherwise, we will also be under compulsion to keep on promoting him to ensure that our fees is being given. Because I promote him, he make money, he give us the money by way of audit fees, no problem. Even in that situation, promoting the interest of the client will always become advocacy threat. The reason is, I have a client who is an education institution. I have a B client who is providing supporting services to the education client. I give this reference to this company and keep on promoting. What will happen is, when I sign the financial statements of a company or a trust or a society, I will not be able to ask questions regarding the payments made to B company, because he will come and say, obviously, you have only promoted B. How can you come and ask a question now? This is an advocacy threat. Next is lobbying in favor of legislation on behalf of a client. Obviously, the clients will have so many issues, and let it be GST, let it be FEMA, let it be income tax. It is not that I should not represent the client. For example, I may be representing one of the client to provide relief under CBDT. Independent CBDT is having certain independent eligibility for considering certain allowances. In those cases, I can make a representation on their behalf and give it to them, represent them also. But I'm not supposed to lobby in favor of a legislation to be created for a particular client, which is not advisable. In that situation, there is an element of advocacy threat. So we have considered self-interest threat, self-review threat, advocacy threat. There are two more threats which has to be discussed. After that, we'll go to that other areas. Familiarity threat, very, very important. Basically, this is the reason for bringing in rotation of auditors in case of listed companies, and earlier it was available in respect of banks and government undertakings. Whenever a familiarity happens between you and your client, obviously there is an element of familiarity threat. We will be under the assumption that this client will not make mistakes. So we keep on signing the financial statements. At some point of time, there may be a mistake which will happen. So the familiarity with which you are involved with the company, or the company's executives, or company's owners, or my own immediate family member is the director or officer of the company, all these things are basically a dangerous familiarity threat. Long association with audit client is also very dangerous. There should be rotation of audit in respect of companies also. But the disadvantage is most of the private limited companies are glorified partnerships only. They will not be inclined to have any other auditor other than the routine auditor. Only thing is, we will have to keep our arm's length distance with the party, and whatever be the long association with the audit client can be only in respect of personal actions which is going to happen, not in the audit functions. Whenever the audit function happens, we have to keep our independence as much as possible and do the audit so that this threat can be overcome. Last but not the least is intimidation threat. Very, very important threat. This happens almost on a daily basis to any other client. Threatened with a dismissal from the client engagement or an audit firm. If you don't sign the financial statement this time without qualification, next year you will not be appointed as auditor, which is absolutely intimidation, which cannot happen. Once intimidation threat happens, it's better to sign off and go off rather than binding with them and succumbing to the pressure. Same way, this happens in most of the banks for the same thing. Whenever you are doing a NPA classification, the banks comes and say, sir, you keep on classifying all these things as NPA. We will be referring to your our head offices. Next year, you may not get the audit. Obviously, my dear members, this cannot happen because what you are doing it in a professional manner, nobody else can question. In the earlier occasions, senior members probably who are hearing this will be knowing that in the earlier 1992, this provisioning as far as bad debts is concerned was very, very simpler thing. Whenever I have the authority securities available, I need not provide for that. Now it is not the case. Once an asset becomes not recoverable beyond 90 days, I have to make a provision. If I am found out something which is definitely required to be making a provision, you need not go back at all. If you are threatened with that, it is called effective and intimidation threat. Pressure to agree with the judgment of the client. Client says, sir, I am eligible for this benefit. For example, take the case of a CSR expenditure. Wherever a company incurs some CSR activities, they say, whenever I incur a CSR activity, I am eligible for this deduction. CSR expenses is not eligible for deduction to 37, which is very categorically mentioned in the Income Tax Act. So you can very well say that it is not eligible. Then they come with a situation, sir, I am spending on the trust, so I should be eligible for ATG. Maybe, may not be. You have to take a call on the basis of real test situations and consider that and then do it. But you cannot be pressurized to accept the judgment of the client unless there is a professional support for that. Accepting a significant gift from the client and being threatened that acceptance of this date will be made public. This is happening on almost on a daily basis with the general public itself, leave alone the auditors. Probably many of you would have gone through the papers. Somebody has taken a video call with one particular party in which he has misused the person's name, and they are saying that I will be publicizing, otherwise you have to pay transfer 10,000 rupees to my account or 1 lakh to my account. This sort of danger is happening in case of corporates also. Whenever you receive a gift from them, this I exactly explained to you few slides back. If you are going to buy a property from a builder client, be very clear what he is selling to the outsiders. Same market value, you buy it. You don't buy it at 60% of the value. Obviously, the balance 40% is considered as a gift, and he will very well say that I have given you a gift. You have to sign on the dotted lines. If you are not signing on the dotted lines, acceptance of the gift will be made public. This is an intimidation threat. Please understand, my dear friends, whatever be the thing which we have been talking on the earlier occasions, all these things are basically for ensuring these 5 threats are being self-interest threat, self-review threat, familiarity threat, intimidation threat, and advocacy threat. These 5 threats have to be overcome. So whenever you are taking up a particular audit function, you have to examine whether you are under any of these threats. If you are coming under any of these threats, don't touch the client and forget about this. Excuse me. There is a threat. There's a threat from the power cord saying that you are running out of battery. So I had to mitigate the threat. Sorry for the disturbance. So what is the precaution to be taken whenever you are facing a threat? Please understand, these are the ineligible services, very, very categorically ineligible services which you are not supposed to take wherever you are doing an assurance client. Accounting and bookkeeping services. Whenever you are an auditor of a particular company, you are not supposed to touch any of these cases. Accounting and bookkeeping services, internal audit. A statutory auditor can never be an internal auditor. designing and implementation of IFC, financial information systems, even the ERP. ERP also you are not supposed to create, because once you go and prepare the ERP, when you are going to prepare, give a report on the information technology systems report, you will be under a threat. Actuarial services, you are not bound to do an actuarial service even if you are having an actuarial certification. For example, in the MDP candidate, MDP practice, actuarial can be a part of the chartered one firm, that you are not supposed to do. Investment advisory services, obviously you are not supposed to do. Investment banking services also you are not supposed to do. Outsourced financial services, for example, getting loan for the party, getting merchant banking arrangements, getting IPO offers, all these things we are not supposed to do by way of financial services. Management services, there is an exemption which is available subsequently, I will come back to that, but as it is, any management services is not eligible to be done by an assurance functions or any other services as may be prescribed. These are the samples which I have given. So whenever I am doing an assurance function, I am not supposed to do any of these functions. If you don't do any of these functions, obviously the self-review threat or advocacy threat or self-interest threat will not happen. So you can be very well be sure that you are not falling into any of the issues which is going to be created. I take a classic example. Normally, I don't mention the client's name in the cases, but this is a reported judgment, public widely accepted. So I am taking this example. In the ILFS fiasco, the auditors have done assurance functions and they have charged audit fees of 4 crores, and there is other engagements for which they have charged an amount of 6.66 crores. Obviously, there will be a self-interest threat which is happening in this particular case. This is what has been questioned by NAFRA. NAFRA has questioned basically when you have been doing other assurance functions or non-assurance functions as where you have charged an amount of 6 crores and audit fees you have charged only 4 crores. Please explain to us why there is no self-interest threat. This is a classic example of conflict of interest. Please understand, these sort of arrangements cannot happen. This has been already taken at a higher level, and of course, auditors are also taking up with the appeal route. I'm not saying that this is already decided and concluded. That is not my point. My point is, in this particular case, NAFRA has made it very categorical. The auditor has done assurance functions at an X value and non-assurance functions at 1.5x value, which is wrong. They have also said there is no staff rotation at all from the audit side, and obviously familiarity threats has happened because the same set of people have been doing the work. And in respect of this fees fixation, audit committee approval has not been obtained. This has been explained very clearly in the NAFRA observations. Whenever an auditor is supposed to have X amount of fees, when assurance, other functions, in fact 2017-18 may not be an issue, but problem is it has not been gone through the audit committee route also. Approval not obtained. This is a classic example of violation of code of ethics, and they may be having a problem. But let us not go into this case as such. But the point which I want to drive home is, whenever you have an assurance functions, keep yourself away. Don't take the non-assurance functions. Having come to that, these are the new developments as far as Code of Ethics 2019 is concerned. But there is a development. There are few developments in ICAI, because obviously whenever a law comes, there will be definitely some restrictions and resistance which will happen. So institute also considers that, and there is a breather which has been given. Let us see what are all the breathers which has been given. In this meeting, the council has decided, due to situation COVID, following things are deferred. The first thing is responding to non-compliance of no clause, which I have mentioned at that point of time. So no clause is being deferred for the time being. They have not yet notified till 2020. Till I go into the session, it has not been notified, but it may take some more time because the next council has to come and sit and discuss on this matter. But for now, the no clause regulations are not there. But does it mean that I don't have to refer to any non-compliance of laws and regulations? Please understand, my dear friends, whichever audit you are doing, in respect of that company, whatever is directly applicable in respect of laws and regulations, you are supposed to still examine and report whether any violation is happening or not. For example, you are auditing a cracker industry or matchbox industry. Obviously, the firearms provisions has to be considered. In respect of a banking organization activity, the insurance act, insurance, theft tax, etc., has to be considered. Wherever you are doing an audit of an information technology company, obviously disaster recovery plan act has to be considered. Whenever you are going an audit in a place where it is prone to earthquake, DRP management has to be done. So wherever you are doing a particular audit, what is applicable in respect of that particular company, you are still bound to do. Just because they have deferred this no clause, I am not under a situation wherein I am fully protected. It is not the case. I am supposed to do the verification of compliance of the laws and regulations as applicable to a particular company. I don't have to give a draconian exhaustive report saying that the company does not have any non-compliance at all. That issue is not there for the time being. The fees, the relative size, all the 15%, all these things has been deferred for a moment. They have said that that can be overcome for a moment, so you need not bother about that. But still, I'm making it very, very clear. Whenever you have a particular client or his associate companies coming to you more than 15%, please review whether that it gives an independent threat or not. Because one particular significant client, if he goes away, in fact, more than code of ethics, we ourselves have a risk of running out of business. If that particular client fails, we also will fail. The third is taxation of services to audit clients. It is still permitted. When they have prohibited management services, taxation services is still not allowed. For example, appearing before CAT, appearing before tribunal, appearing before the income tax authorities are still allowed. So taxation services can be done by the auditors. It is not prohibited. It has been given as an exception. With the exception of these three provisions, all other provisions of revised code of ethics are applicable with effect from 1st July 2020. There are few more circulars, clarifications which has been given as far as single fees, fees from single client is concerned. It may be clarified that it's not a bar. That is more than 15%, you are not supposed to take. It is not the issue. But only thing is, if I take more than 15%, you are bound to give an information. In the audit may be continued with taking, as mentioned, there is a paragraph which has been given where they say you are supposed to communicate to the members in charge of the governance. You are supposed to say the fees received from your client, and also the audit committee, you have to mention that the fees received from you is more than 15% of the total fees I am making it. I have to report to them and still continue with the audit. There is no harm in that. This is what they have given as a circular. But my personal opinion is, in that situation, you have to definitely rethink very well, and either you have to remove the clients from your case, or you have to expand your business activity with other clients so that this 15% slab will not come. And moreover, once it is beyond, your dependence on one particular client goes beyond a level, definitely you are having a existence issue itself, leave alone the code of ethics. Of course, this 15% limit is not applicable in respect of audit of government companies, public PSUs, nationalized banks, etc. That will not come into the picture. It is only in respect of private clients which you are having. Otherwise, there is no problem at all. Or where the gross total limit does not exceed 5 lakh of rupees, then also it's not an issue. These are the clarifications given by the institute. And moreover, it is only in respect of audit client. Non-assurance client, there is no restriction at all. From for giving an opinion, you can charge 10 lakhs also for a particular client. If your total fees is 15 lakhs and you are charging 10 lakhs to ABC Limited, you are so fortunate enough, please go ahead and enjoy. There is no problem. This restriction is only in respect of audit client, not in respect of non-assurance functions. Communication with the retiring auditor. My dear friends, please understand, of the complaints which institute is received in respect of disciplinary cases, non-obtention of no objection certificate is one of the important agenda which is happening. Institute is also viewing it very, very seriously if no objection certificate is not obtained, number one. Particularly more so if no objection certificate is not obtained because of pending fees. Once the previous audit is having a pending fees, you are not supposed to do an audit. If you have done an audit without taking an NOC, straight away you will be suspended from practice for 15 days. Institute is not going to consider any leverage in that particular area. But this particular circular is in respect of the communication with the retiring auditor is sufficient if you do by way of an email to the retiring auditor on the registered mail ID with the institute. You cannot just like that give a mail ID to sundarajan@gmail.com. I may not have that mail, or that mail may not be applicable to me. The institute, you will have to examine what is the email ID which is official mail ID of him. To that mail ID, if you give a communication and if it has reached him, no problem. So my suggestion to the client, my suggestion to the friends is, whenever you are going to send a no objection certificate by way of email, please do it through a formal mail. Take the email ID as given by the client. If you are possible, you can examine with the institute also. Then you send an email with the read acceptance response to you. Once it is read and responded, you can be rest assured, don't have a problem. Otherwise, you are in for a problem. Send the register post acknowledgement you also, send the email also. Definitely students, members will come and ask me what will happen in case of a bank audit, where you have to give us an opinion and immediately take the audit. You please give a letter saying that if I don't get an opinion within next 2-3 days, on this basis, we will have to take up the audit because we are under compulsion. But the same thing is not applicable in respect of other audits. Please send the mail sufficiently in advance, wait for the response, and then take up the audit. Otherwise, we are in a problem. But this email is sufficient, provided you know the official email address of the retiring auditor. Otherwise, this is a problem. So that is in respect of code of ethics. But there are sufficient developments in the institute which has to be gone through. February 2020, they are given in the guidance note on issue of certificate for GST. A format has been given. Obviously, the GST certification is no more applicable because 9C is not applicable. It is not required. It is not prevalent. But still, any certification issued in respect of GST, we are supposed to use the institute's formats only. Institute has also made very clear. This is not a new development. This has been a development in the earlier occasion also. SAE 3400, in which they have made it very clear. A chartered accountant can sign projections. It is a wrong mythical understanding that the auditor cannot sign the projection. It is not the case. We can sign the projection provided we follow SAE 3400. What does it say in SAE 3400? They are making it very clear who is providing the assumptions, what are all the assumptions the client is provided, whether these assumptions are valid and clear and justifiable. If you are having that information, present that and then give the projections and make it very clear in the certificate according to the format which has been given in 3400. Please go through that. The format is given clearly what is the certification which you are supposed to make in case of projections. Without following all these procedures, in the projection below, you just sign for Sundaran Associates and sign off. That is danger. That is not acceptable. You have to follow, say, 3400, go through the certificate format which has been given in the SAE 3400, and also mention who is providing the assumptions, whether the assumptions and provision projections are reasonable. For example, a company is having a turnover of 10 crores this year, and next year, for the purpose of banking finance, they are making the turnover as 100 crores. What is the justification? Are they planning to have an expansion of their activity? Are they having an authorized assured orders from the other parties? These things has to be examined, and then you will have to certify. Otherwise, we are not supposed to certify. Projections can be signed, provided you follow SAE 3400. What do you talk about provisional financial statements? That is, audited financial statements, obviously we will be signing as audited as per our report attached. There is no problem at all. What will you do in case of provisional statements? Provisional statements can be signed as a compilation only. That is, compiled from the records of the client, I can give a report for which SRS 4410 is there. Institute, fortunately, my dear friends, they have an auditing standards or assurance standards or engagement standards for all this work. Only thing is we have to pick it up from the respective place. SRS 4410 is making it very clear, saying how you can compile a financial statements. The ledger accounts is given by the client, the trial balance is given. You are just doing a compilation and preparing a financial statements. You have to make it very clear, compiled from the books and records as per our report. Once again, there is the report format available for compilation. That report has to be signed by you and UDIN has to be created. Without these two items, if you do prepare a financial statements, put a seal and signature, it is liable for disciplinary case. One more important critical item which we would like to mention is any financial statements, provisional financial statement can be signed before the end of the year. Before the end of the year. For example, you are the client is applying for a bank loan on January 2021. You can prepare a projected provisional statements as on 31st of March 2020, because past records are available as audited financial statements. For March 21, you may be required to sign a provisional financial statement. You can provide, but before the financial years. Once the financial year is over, I am not supposed to certify a provisional financial statements at all, because it is ready for audit. You are supposed to do only audit financial statements. No unaudited financial statements can be signed. It's advisable to take a compilation signature from one of your friend auditors rather than you yourself signing when you are an assurance function. For a non-assurance clients, you are not the auditor of the client. You can do compilation even after 31st of March. There is no problem. I think I'm making it very clear. There are two types of statements which is being signed for the purpose of banking. One is projections, another is provisionals. As far as projection is concerned, you can sign, follow SA 3400. As far as provisional statements is concerned, follow SRS 4410. Of course, the provisional statement is different from limited review statements. All the listed companies, they are supposed to give a limited review statement every quarterly basis. That is different. For that quarter, you do the audit and give a limited review report. You may not do the entire audit in a proper manner, but there will be limited review available. There is a scope available. There is a format of report available as far as limited review reports are concerned. That report you sign and give it. There is a difference between provisional statements and limited review statements. Hope I am clear. Unfortunately, we are not facing each face to face. I may not be able to understand whether you understood or not. I presume you have understood and I am following it up as it is. Sorry. Ethical Standards Board keeps on issuing the decisions which has been taken in the decision case. Very, very important, because that will give you a value addition whether we are going according to the ethical standards or not. What you may be under presumption that this is not. For example, I was asked by a chartered accountant, I have not taken up the audit from a previous audit. I have done only a tax audit. What is the problem? Tax audit also, previous auditors, no objection has to be obtained. It is not statutory audit only. Even in case of a tax audit, previous auditors, no objection has to be taken. Even in case of internal audit certification, you are supposed to take a previous auditor subject, no objection. Otherwise, ethical standard boards is very, very clear. An auditor cannot take the audit function of another auditor. FAQs by ICAI. ICAI keeps on issuing FAQs. Those FAQs, you can go through that, because whatever be the development which is happening in the ICAI will be useful for us for ensuring that whether we are following the code of ethics or not. Kindly give me a minute, please. Institute keeps on giving all these standards. All of us know company issues accounting standards. Of course, Companies Act 2013 itself has brought in accounting standards. By AS Rules 2006, they have brought in accounting standards, which has been adopted from our institute's accounting standards. So as far as corporates is concerned, we have to follow companies accounting standards rules followed in the AS Rules 2006 and now 13. As far as non-corporates is concerned, we have to follow all the accounting standards issued by the institute from time to time, upgraded from time to time. Next is standards on auditing. Please understand, my dear friends, SA is very, very important, particularly after the Companies Act 2013, introduction of section 143 in the Companies Act. If an audit is done without following standards on auditing, the auditor is under fault. He is under fault. So standards on auditing we are supposed to follow. Whether all the standards on auditing has to be followed, yes, we have to follow. Accounting standards, there may be exceptions. For example, small and medium companies, there may not be certain accounting standards not applicable. For example, AS 15, there is a restriction which is available. AS 3 may not be applicable. Whereas in SA, all the standards on auditing has to be followed, right from the knowledge of the business of the client, up to the evidence, up to the documentation, all these standards are applicable. So we are bound to go through the auditing. Why I am mentioning this very specifically is, if you are following the accounting standards, if you are following the standards on auditing, if you are following the code of ethics drafted by the institute, we are following the FAQs of the institute, then we are not having any problem. We can defend us comfortably in a situation where we are going to have a disciplinary case. Or, in other words, I will ensure that I will not go into the trap of disciplinary case at all. Please understand, once you enter into a trap of disciplinary case, the period is unending. It can go beyond so many years also. Let us not dream of entering into that wrong pedestal. Schedule 3 amendments, whether it is applicable for 2021 or 2122, a debate has been going on. Now it has been decided that it is 2021 is not applicable. But the point is, 2122 it will be applicable. Once it is applicable for 2122, it is ideal for you to make up things now itself, because next year you will have to give the previous year figures. Please approach yourself in a proper manner. CARO, there is a revised CARO which is available. Please understand, all these things are very, very relevant. If you, for example, I'm just taking one or two examples only as far as CARO is concerned. There is a situation wherein, in case of fixed assets, in case of immovable assets, I'm supposed to verify whether the company is having the records, registers, and name of the title deeds in the name of the company or not. We are supposed to give a categoric answer in the CARO. CARO is a statement. Make it very clear. CARO is a statement. It's not true and fair. I have to say yes or no. Same way, there is one more clause where whether there are any statutory dues outstanding for more than 6 months or not, as at the end of the financial year. The problem is, my dear friends, if an advance tax has to be paid by the client on June, September, December, and March of every year. If the June advance tax itself is not paid, as on 31st of March, is outstanding for more than 6 months. The guidance note is very, very categorically clear that whenever an advance tax is due for more than 6 months, we are supposed to give a report to the CARO. It's $1 million question. How many of us report that? If it is not reported, we are in for a problem. When we'll have a problem, that will come subsequently. But the point is, there is a revision in CARO, which we have to be very, very clear how it has to be reported. Periodical updates. Institute keeps on giving periodical updates. Please let us be very, very clear. We can keep our eyes and ears open for ensuring that the periodical updates are being updated in our brains also. And our CPA requirements is going to help us in that. Emphasis of matter versus qualified report. In the SA 700, 705, etc., Institute has very categorically said when you can give emphasis of matter, when you can give a qualified report. All emphasis of matter need not be qualified, but all qualified report will have an emphasis of matter. The reason is emphasis of matter will come only when you have a notes on accounts. When you have a notes on accounts and there is a particular note which you want to have an emphasis of matter, you have to give in the main report. There is a possibility that there is a, for example, I am once again taking an example. There is a loss which has happened. There is a fire which has happened in a particular company's case, and the loss is accounted on 31st of March itself. There is a possibility that loss can be compensated by the insurance company. When you are signing the financial statements on 30th of June, there are two possibilities, or rather three possibilities. One is the insurance company can accept and give that money. In that situation, on the basis of events occurring after the data balance sheet, I need not recognize loss itself. There is another opportunity. The insurance company may reject it partly and they can provide 50% of it. In that situation, I have to provide 50% of the loss, and 50% of the loss I need not provide for. There is a situation wherein insurance company has totally rejected it. In that situation, loss has to be fully provided for. The last example, if the loss is fully provided for, it may not require anything at all, but still I may give a notes on account saying that the company has incurred a loss as on 31st of March when there is a fire which has happened. As per the notes, you will be giving all those things. That note you will be referring here. End you will say, however, there is no, it is not modifying the audit report. We will say it is modified because the provision has been fully made. For example, if the provision is not made, then in that situation, to the extent of X amount, the provision has not been made, to the extent the report is qualified. So emphasis of matter itself can have a qualification and a non-qualification. And the third and last possibility is the money is fully recovered. Even if the money is fully recovered, or money is fully sanctioned, but money has not been received, you give in the notes and accounts, the insurance claim has been received, but you give an emphasis on matter and leave it like that. So please understand, my dear friend, EOM and qualified are neither same nor totally different. But at the same time, when you have an EOM, you should have a notes and accounts. Without notes and accounts, you cannot have an EOM. All these things are relevant because when you give an audit report and you give an emphasis of matter, which requires a qualification, you leave it like that. You presume that I have given an emphasis of matter, I am safe. It is not safe. That is why I am mentioning this particular point. When you are supposed to give an EOM along with qualification, you have to give along with the qualification. If you are giving an EOM without notes and accounts, without referring any notes to the emphasis of matter, then also it is a wrong reporting. Rather than giving a wrong reporting, better don't give any report at all. You may be reasonably safe. Once you give an emphasis of matter and you are not providing that matter subsequent in some other place, you are in for a problem. So these are the technical standards. The earlier slide is in respect of other developments in code of ethics itself. These are the technical standards the institute keeps on giving, and members' responsibility is there to follow up all these things to ensure that we are not having any problem in the code of ethics. This is what I was mentioning. Non-compliance of standards on auditing will be a violation of clause 9 of the part. All these things are very much available in your theory. I am going to circulate this. You can go through that independently. But my point is, this non-compliance officer will be deemed a violation of that particular clause. Leave alone this. Companies Act 2013 itself is brought into the action. Section 143, you can go through that, which makes it very, very categorical. Non-compliance of standards on auditing issued by the Institute NAFRA. Of course, NACAS. Now NACAS has not issued. Until then, Institute of Chartered Accountants of India, whatever they have given, will continue to be standards on auditing. Institute is fighting to ensure that SAs will be only with them. Accounting standards has been given to NACAS, but standards on auditing will be only with the Institute. Right now, we are only giving the standards on auditing. We have to follow it up very, very clearly. Otherwise, these classes will definitely come to a, if you follow these standards, it will come to your defense. For example, we are supposed to give a certificate and there is an evidence available for you. Once you go through SA 500, which states what is the evidence which you can rely upon. On the basis of evidence, if you are given a certificate, you are safe. If you have the documentation to prove that you are dependent on particular certificate which is very much available, then you are through. Otherwise, you are in for a problem. Clause 7 of first schedule. Please understand, this particular clause is the most important clause which we have to see as far as code of ethics is concerned. A CA in practice shall be deemed to be guilty of professional misconduct if he does not exercise due diligence or is grossly negligent in his professional duties. Both are very, very important. Does not exercise due diligence is a different character, and grossly negligence is totally different character. We have to take only few examples for understanding this. For example, if you are doing an audit of a particular society or particular company, wherein there are 4 directors which are available, and 4 directors, one director is having a dissenting attitude, and the board minutes he has categorically said that there is a dissenting activity which is happening. Audit committee has also not approved the financial accounts. All these things you have not examined that and you sign off as it is. This you are not exercised due diligence. But the same case, there is the company which has sold a particular property, which has hidden it from the agenda, which has not reflected to you at all, and you have missed out to find it out, then you are coming under grossly negligent. Both are dangerous. If either of these things, you will be under a situation wherein you will be guilty of professional misconduct. This is what I make very clear. It is look like simply worded that there are only 2 lines as far as class 7 is concerned. A CA in practice shall be deemed to be of guilty of professional misconduct if he does not exercise due diligence or is grossly negligent in conduct of professional duties. In case of a net worth certificate, I am going to a different example. Take case of a net worth certificate of a company. You have all the balance sheet figures available. You bring all those balance sheet and put a wrong figure. For example, in the balance sheet, I have a fixed asset of 1 crore. I show in the net worth certificate to the extent of 10 crore. I should have a justification for the 10 crore if they have a valuation report. Not that all the in the historical cost valuation, you will be showing the assets at the historical value only. So there is no harm in doing a revaluation, but provided I'm not eligible to do a valuation because I'm not a person eligible for valuation. I have to take an opinion from a approved valuer, utilize that as an evidence. Once again, SA 500 will come to your picture, and SA on expert's opinion also will come into the picture. Both you can add and give a report. There is no problem. It is not grossly negligent. If that person has failed in his duty, even then you are not having a problem, because as long as the person who is giving a certificate is authorized to give the certificate and you depend on that, there is no problem at all. It is a simply worded clause, but this clause is very, very critical as far as code of ethics is concerned. The member should also act diligently in following all the applicable technical and professional standards. Otherwise, we are in for a problem. So we have gone through what is Code of Ethics 2019, what all the threats which institute is giving, institute is perceiving, and what all the institute's inputs for you to defend yourself. If all these things are failing, we are coming up with a violation of clause 7 of this schedule 1. In that situation, what is the next step which we are going to have a problem, which is called as disciplinary procedure, which any of the chartered accountants should not fall into the trap at any point of time. Let us go into the disciplinary procedure for the next 10 minutes for us to understand how the procedures happen. There is a complaint which has been filed in Form I. As far as CA Act is concerned, the complaint has to be filed, and the complaint will be filed with the director discipline. If the director's discipline is of the opinion the member is guilty, and he will refer either to the board of discipline or the disciplinary committee, as the case may be. If it falls under 21A, they give it to board of discipline. If it falls under 21B, it goes to the disciplinary committee. The point is, there is a process. One complaint has to be received. For example, I have to raise a complaint on a chartered accountant saying this is a mistake. In Form I only. If I give a general complaint letter, it is not accepted. It has to be even in Form I to be director discipline. Once he considers that, he can consider whether it is guilty of conduct or not guilty. Both the cases, he has to report to the board of discipline or disciplinary committee, as the case may be. Who can file the complaint? These are the persons who can file the complaint. Banks and financial institutions can give a complaint on audit, on projections which has been certified by you, on any other matter. For example, even the wrong information given by the auditor in the certificates which they have given, That also the bankers can take it as a complaint and they can file it. Investigation authorities, for example, a client is investigated by either a CBI or a vigilance company, vigilance department or any other department. They find out the auditor has collaborated with the client and given certain inputs which is not in consonance with the provisions of code of ethics. They can give a complaint. Companies can give a complaint, firms can give a complaint, other entities can give a complaint. Central and state governments also can give a complaint. How do they give a complaint? Central governments, wherever central government audits undertakings are being certified, or even in case of MP-led scheme, I am certifying on the basis that the scheme of fund is being released. Central government can come and say the audit has not properly followed the rules and regulations. These are the persons who can give. Who are the others who can? These are the persons who are using the reports and certificates. There are other people who don't use a certificate also can also complain. Who else? RBI. Once you are doing a bank branch audit where you are giving a wrong reporting, or you are doing a bank concurrent audit, you are continuously giving a wrong report, RBI on its own suo motu, they can raise a complaint on you. Because RBI inspectors also go to the respective banks, they find out that the earlier auditors are not properly given, they can give a complaint. SEBI, in case of public issues, you give lot of certificates. There are lots of certificates which you give. SEBI can give a complaint on the basis of certificates wrongly given by the chartered one. NCA. There are lots of reporting which has to be done as per accounting standards rules. For example, related party disclosure. If you have not given the related party disclosure properly, MCA can give a complaint on the institute. These are the other statutory authorities. Fellow brethren, you and me can give a complaint on each other, either on the basis of vengeance or on the basis of anything for that matter. But generally, auditors give a complaint only on the basis of no objection certificate. That is, you take a file which has been managed by me without giving any information to me, and you can give a complaint. Fellow brethren is a potential danger for making a complaint. Client and part thereon. A client, if they are offended, they can give a complaint on us. For example, I am not cooperating with them by giving them what all the certificates to be given, or we have taken the money from client for paying the advance tax, we have not paid. You can very well be surprised whether these sort of situations can happen. There are lots of cases which has been notified to the institute. They have taken the money by way of advance tax which they have not remitted. There are chartered ones who have misused that money. They can give a complaint. In a client, one partner is in your favor, one partner is not in your favor. The other partner can also give a complaint. Others, we don't know. Anybody walking across the road, if they find a chartered accountant violating the laws and regulations, they can give a complaint. No restriction, provided they have the necessary information. Of all the other things, last one is institute on its own information can file. What sort of example is possible? For example, a chartered accountant is arrested on some other ground, need not be on a professional ground, any other ground, and is being publicized in the paper. The institute on its own suo motu on information, they can file a complaint. Otherwise, there is a complaint which is available in respect of Mr. X. Mr. X claims, I have not certified. This is a certificate signed by Mr. Y on the same behalf of the company. Mr. Y is no more with me. In that situation, that information, institute can raise a complaint. So these are the places where complaints can be raised by anybody. In the process, once a complaint is given, is there a possibility of withdrawing? Yes, there is a possibility of withdrawing. The complainant can withdraw the complaint, and the director cannot give it as it is. He has to place it before the board of discipline and disciplinary committee, as the case may be, and then once they approve it, they can permit the withdrawal. But whether to permit the withdrawal or non-permit the withdrawal, opportunity has to be given for hearing, and then only the same order can be passed. Each and every complaint in Form A, once it is received, it will be acknowledged. There is a unique number which will be identified, and after that it is given, a prima facie opinion will be taken, and once prima facie opinion is raised, that will be given to board of discipline and director discipline. Member also will be given. Our prima facie opinion is you are proven to be guilty. You have any answer, you have to respond. If there is a previous complaint pending, that complaint will be clubbed along with this opinion, and then steps will be taken. If defects are not rectified, director shall form an opinion. That's no way. That is, he will come give an opportunity. There is a complaint which has been received like this. You have anything to say? We have to say something. Next slide is very, very critical, important, my dear friends. What is to be done as far as complaints is concerned? When a director examines you, That is, he examines the complaint and asks you for a written statement. You have to give a written statement. Then he asks you for rejoinders. You give rejoinders also. Any other documents in support of your case, you have to give all these things. After this examining, he will say whether you are prima facie guilty or not guilty. Either way, he can take a decision. Probably your papers are just satisfying his requirement. He will say you are not guilty. If it is not satisfying, he will consider you as a guilty. Whether he has found him guilty or not guilty is not the end of the matter. After that, the director has to forward it to the Board of Discipline or Disciplinary Committee. They may or may not agree. They can take the case fully. But still, once you are not considered as guilty here, there is a possibility that the higher authority also will consider you as not guilty. It's a possibility. And if there are any further investigations required, that investigation will happen. But where is the problem? The problem happens on the right side of this thing. They will come and ask you, do you plead guilty or not guilty? Guiltish. If once you say that guiltish, it's going to be a problem. That is, once you yourself find it as a guilty, anybody in the under the earth cannot defend you at any point of time. So please understand, before writing any statement, before giving any rejoinders, please discuss with another expert. The reason is, I see a lot of cases wherein without a proper guidance, they keep on writing some statements which ends up as a problem for themselves. I will take some classic examples later on, but this is an area which is to be very, very careful. I only pray none of the listeners here is going to have a problem of disciplinary case. But the point is, if at all that other things or unusual things happens, it is not that it cannot happen to anybody. It can happen to any of us. We are all doing certification day in and day out. Not all the clients are good all the time. Let us be very, very clear. So in that situation, please follow it up properly and follow with a proper guidance by another expert. These are the normal answers which lead to guilty as verdict. The guilty verdict, how does it come? The member says, I'm really sorry. I have not intended to make this error. I was only for 5 years, I was in profession. I was not more than 5 years. I know only started understanding. I will not repeat the same mistake hereafter. Please forgive me. All these things are dangerous. Please understand, any of these answers which is coming up in the before either the director discipline or the board of discipline, you are bound to have a problem of finding guilty. Leave alone all these things. The last thing is not writing to them at all. Because once you get a letter, you are bound to reply within the period which they have given. So normally they give 30 to 60 days time. You are bound to give a reply. If you don't give a reply, you are in for a serious problem. So replying is also dangerous. Not replying is more dangerous. Why replying is dangerous? If you are not properly replying, it is going to be dangerous. Why not replying is dangerous? Obviously, with like whatever income tax case happens, if you have anything, you provide it. Otherwise, I will allow it as it is or disallow it as it is. Same way, on the basis of the papers available, they will decide. Please ensure that in case issue happens, don't give these sort of answers. What are the recent developments which has happened? Notice RPD, this I already explained to you. Disciplinary cases are happening only by way of video conferencing. Physical hearing is not happening nowadays. The happening, it's either done at the ICICI premises or from your own office, or it can happen, or in your counsel's office, but option has to be exercised in advance because they give an option. Where do you want to attend the case from? I have to give a reply in writing. Written submissions has to be given well in advance, both by email and by post. The reason being, email they may not see, post they may not see. Both has to be given. You have to have an acknowledgement. Then only the case can happen. These are the recent developments, not in the earlier occasions. Earlier occasions, physical hearing was happening. We go and make the presentation. Now it is not happening. It's only happening by way of a video conferencing. What I understand from few cases which has been handled by me, the approach of members are actually casual. They don't understand. It's after all of the issue, they have given a normal letter, don't bother. Another is overconfidence. They presume that they have not made any mistake at all. Another is fear. They fear that have they made a mistake, what should be done? And I know everybody. I know the central council member, the region council member. I know the law. I know the advocate. I know the charter owner. I know the judge. All these things will definitely have a problem. Please understand. Ensure that you don't approach. Whenever you have a problem, this approach has to be done. I am once again praying none of the persons hearing should come to this situation at all. But God forsaken, if that situation happens, what is to be done? So Please understand, once there is a problem in the disciplinary case, finding guilty, your name will be removed for a period. Maybe for 15 days, maybe for 1 month, or maybe for years. For more than 2 years, it has to go to High Court. But reprimand, they may reprimand because it's a simple mistake. Okay, you have been found guilty, but we reprimand. Just get off. Even that it is guilty only. Because reprimanding is not absolving you from the punishment. You are guilty, but considering the non-heinous requirement, they are allowing you. For example, no objection certificate. The other auditor also subsequently said, I don't mind, I can withdraw the complaint, but withdrawal doesn't happen. They can leave it like that. Go, get away, reprimanded. But the problem is, reprimanding is also guilty only, because subsequently, whenever you apply for any of these government empanelment, etc., you are bound to explain whether you have a case of even reprimand has to be done. There is a fine which may be levied. Fine and strike off both can be done. The last thing is exonerated, which is the most important thing which all of us pray for. Because once you are exonerated, the case itself does not stand. The repercussions, all these things, repercussions will have an impact on your bank audit, empanelment forms, government audits, wherever it is possible. So these are the issues which can happen in case of a code of ethics violation. What are the further remedies? You can go to Appellate Authority, High Court, and up to Supreme Court you can have. So what does this code of ethics or disciplinary cases, what is the action trigger point? I have given certain highlights. All these things are important, but I have given certain highlights. Where is the trigger point which happens? In case of bank scams, projections is critical. There are lots of scams which has been happening very recently, which you have been seeing. For example, jewelry scam which has happened, and a large sugarcane scam has happened. All these scams, whenever they give a projections, the projections are going to be a serious critical issue, where the auditors are also brought in as collaborator of the offense. RBI, NBFC inspection points, which is very, very critical. Tax audit not signed, bidami transfer, records in auditor place, very, very important. For example, a party is being searched or raided. Party is having a sale deed which is available, but they have found an information that there is a agreement to sell which is available, which is for a higher value. Document is not obtained here. They go and find out the auditor's place. There it is available. The department give a complaint, because the auditor is also colluding. That is abetment of crime that can be brought in by way of an action trigger point. Please understand, DSE, digital signature, using the digital signature by you. I am sure that all the auditors, we are utilizing the digital, including my office, we use the digital signature of the client. It's basically, it's something like forging the client's signature. He is giving you the digital signature, you are utilizing it. Only thing, a precaution which has to be happened is, you take the digital signature only in case of a specific requirement, along with the information, this is given to you for the purpose of this. And for using that, they give an undertaking, you use it and give it back, there is no problem. Why I am telling this is, there is a specific tax audit case which has happened, wherein the complainant is the client. Client has come and said that, I don't know what the auditor has filed with the tax audit report, because there was an issue in stock valuation. There was an issue in stock valuation. The client has come and said that the auditor has used the ESC and filed it. He does not know. Fortunately, the defending advocates were able to justify, saying that, after all, when I was appointed as auditor, in the new recent situation only, not the earlier cases, in the recent situation, when I appointed myself as auditor, he has accepted it, and then SMS has gone to him also. He has given the OTP also. That OTP has been presented. All these things was able to be proven. You are safe. Otherwise, you are going to have a problem. There are certain issues which can happen in case of bank branch audits, because we presume that the code of ethics is only in larger issues. No, even in case of bank branch audits, it can trigger. How it can trigger? I have once again given three bright items. All other things are not, it's not that they are not bright, they are also bright, but these three critical issues. Earlier year, there was an NPA. This year, when you report, you are not reporting this an NPA. How? RBI inspectors will come and say that they have missed out, you have missed out this particular reporting, you are in for a problem. Potential NPS, all these things are going to be happening, and operations verification, all these things are important. You go through that independently, because I am running out of time, another half an hour only is there. Multiple units are, whereas only 2 units are required as per ICAC concept. You keep on multiple units for each and every certificate you create. So that itself is a problem. It can trigger. Revision of MOC. You are given an MOC to the client. Your bank has found the balance sheet, you have given the report, and you also created the unit. Subsequently, they come and say, sir, you don't have to revise the audit report, sir. You have to only revise the MOC, sir. That itself is a serious problem, because in the audit report itself, we are giving what are the MOCs which has been given. Once you are revising the MOC, obviously the audit report also has to be revised, provided you have the justification for revision of the MOC. In the DCs, there are recently lots of cases which are happening. I'm just repeating here. Bank issues and frauds are the major cases. The complaints are by CBI, CBCD of various states, even agricultural loans issues also, it's coming up. All these things, these are all generated only from certifications and reports of auditors. What are the certificates you are giving? What are the types of certificates which come subsequently? Complaints from tax departments on wrong claims and representations. Other complaint from partners and trustees. Wherever a trust audit is happening and you are not getting the information from all the auditors, or that audit meeting doesn't happen, an auditor has given an opinion to you that he has not concurred with the figures, still you sign the financial statements without considering that adverse remark, you are in for a problem. Partners, when there are two partners, the partnership deed will say the financial statements has to be signed by both the partners, but you keep on signing with one particular partner because he is the managing partner. You are in for a problem, because the other partner can raise a complaint at any point of time. I already told you, professional brethren can give a complaint on you. I am just taking a classic example of 2 to 3 cases so that we will be understanding in a better manner. There is a society, housing society. There is a small group of members who have been sidelined by the majority of the members. They gave a complaint to the institute saying that the auditor has colluded with the management members and they have certified wrong figures. The auditor has to justify by giving all this information. That's a separate issue, but complaint has gone. Unfortunately, in this particular case, there is a huge expenditure, advertisement expenditure has been incurred in this current year as new, for which there is no supporting documents at all. Unfortunately, the auditor is also in a problem. In this case, the auditor himself was also doing the investigation. They have given a report for himself saying that, yes, there have been a misuse of funds. They themselves have given a report. He has fixed himself. It's a serious problem. And during a particular society's audit, just because there is an internal auditor, an internal auditor has given a clean report, you are not closing your eyes. As a statutory auditor, we are supposed to have an exercise due diligence independently. Internal audit report can be only to the extent of dependence on other experts' engagement, but that is not the final thing on the basis of which you can give a report. This is a classic case, so please understand, in case of trusts and societies, you are supposed to be very, very careful on the basis of the financial information which is available with you. Another case where a bank loan has been signed, in which case the auditor has signed the book debts. The book debts consist of figures which are not matching with the accounts. Accounts they have seized, the CBCD people have seized it. This and this is not matching. The auditor also did not have sufficient banking papers for him to defend. He is in for a problem. Same case, there is a serious issue, capital infusion. The bank has stipulated the capital of 2 crores has to be infused. They have passed a book entry. They are crediting capital and debiting some book debts. Whether the book debts are genuine, whether the assets are realizable, none of these things has been verified. On the basis of this, he has given a certificate. He has given a certificate. Capital as stipulated with the sanction ticket of 2 crores has been infused. Actually, there was no infusion which has happened. It has ended up in a bank fraud, and bank has given a complaint against the member on the institute. The case is going on. The member is certifying the assets and liabilities of a company. This I explained in the first stage. There is a balance sheet, there is a land which is available, valued at 10 lakh rupees because that is the historical cost. He has certified in the net worth statements as 1 crore. Whether 1 crore, there is a justification available or not. If there is justification, you are safe. If you are not having justification, you are in for a problem. In one particular case, the asset was purchased on one day. Within 10 days, they have given a valuation report. That valuer himself has given a valuation report. From 10 lakhs, they have given a valuation of 1 crore. I'm just telling you the rough figures. It is not the exact figures. Whether the valuation report which is given within 1 month from the date of 10 days from the date of purchase can be accepted. You have to apply diligence. You have to apply the diligence and examine whether there is a genuine reason which is available or not. There is a possibility of genuine reason. Absolutely, there is a possibility of genuine reason, because when it was purchased, the land might be having a lot of litigations. Within 10 days, the litigations might have cleared. that can have a better valuation. I don't say that it is not possible, but we have to have an exercise the due diligence, and then on that basis we have to do this. One more classic case, proprietor's assets and liabilities are well. That is, whenever a proprietor is there, his net worth certificate has to be certified. Please, my dear friends, don't certify the financial statement just like that, because proprietor may have multiple bank accounts, proprietor might have multiple loans. He has not disclosed the loans to you. When you give a certificate, you are in for a problem. Whenever you are having an assets and liabilities of the particular party, please examine whether the assets are in his name or not. If it is not in that name, you are going to have a problem. These are classic regular cases which is happening where the members are facing issues. Concurrent audits. The other major case where each and every one of us are bound to be vulnerable is concurrent audit. Securities are bogus, units are not periodically verified, because wherever a concurrent audit is given, the audit is given with a specific instruction that liquid assets has to be verified on a periodical basis. Every 3 months it has to be verified, every 6 months this account has to be verified, every year it has to be verified. That what you call terms of reference is very, very clear. If you don't follow that, you are in for a problem. If you have not verified, there is no problem, provided you give it in the report. I have not been able to verify the following assets, because the following units, because the branch has not given the opportunity. Anything for that matter you can write. Without telling that, after 6 months, suddenly one account is becoming a loss, and you are in for a problem. And collusion with the branch management. Once again, here I would like to bring that dependency threat or familiarity threat to come into the picture. For example, as far as concurrent audit is concerned, there is a stipulation that you are supposed to depute your staff at least for 15 days to 20 days on a month. Neither you go or nor your staff goes, but you go and discuss with the manager as if came on a such and such days. You prepare an attendance sheet and he also signs it. 1 month he will do, 2 months he will do. 3rd month he will start using this as intimidation threat. You have never been coming. You have given a certificate like this. I have also signed. There is no problem. You have given a declaration. I have signed. I will show this to the management. You are in for a problem. It's an intimidation threat. Self-review threat also can happen. Please understand. The same way, as far as concurrent audit is concerned, whenever you are doing a concurrent audit, don't do any particular activity for that particular branch. For example, TDS compliance. Just because you are a concurrent, they will say, sir, anyway you are doing the concurrent, so why don't you do TDS compliance? That's a problem. Please don't do that, because there's a threat which can happen in that case. Please understand, as far as concurrent audit is concerned, very, very serious issue. We have to keep on verifying the security on a periodical basis. And wherever jewelry loan happens, please verify with the third party appraiser, because in spite of that, there is a problem. It's a different issue. But at least to some extent, we have to ensure that evidence, once again, SA 500 and 501 and 500, all these things are going to come with the support to you. You have the documentation properly, you are in a better position. Creditors figure misstated. The creditors can raise an issue on you. Creditors can make a complaint with the institute saying that he has not disclosed my balance in a proper manner. I am an MSME, he has not disclosed MSME. That question can happen. My figures are misstated. All these issues will be solved if you have a methodology of taking confirmation of balance. You can immediately ask me a question. Sir, is it possible to take confirmation of balance in case of proprietorship and partnership? Don't ask for everything. At least ask for the major things where you have a suspicion, or where there is no transaction at all for the whole year. You took those examples and ask for a confirmation of balance. In case of corporates, you have your own sample, and in that sample you take those certifications which is relevant. Otherwise, it is going to be a serious problem. Legal case not known to auditors. Whenever you are giving a report on contingent liabilities, in contingent liability you give a report, after finding the SAAs, etc., you find out there are no contingent liabilities. You also take an MRL from the client saying that there is no legal case which is pending. You take an MRL. But what did you do to find out that there is no legal cases? To some extent, you should have examined their files. You examine and record there is no contingent liability. DC, disciplinary committee, is not willing to accept one just because you have taken an MRL, you are saved from that. That is not the issue. MRL, that is say 580, is only for protecting your skin. It will not protect your skin in total. You have to examine yourself, and MRL will come as a support. We have to ensure that we will not do a case where we are assurance functions and non-assurance functions also. That is very, very clear. In these cases, we have solid problems. a member has certified the balance sheet with wrong figures. There are two accounts which has been maintained by the client. One account is having a parallel running and one account is running the actual figures. There is always a conflict of interest. This is something similar to Satyam also. The books of accounts was not properly reconciled. The financial statements was not reconciled. Presuming you have gone through a diligent exercise and you have all the documents in respect of the financial statements which you have certified, then you are not having any problem. Only thing is you have to certify, you have to justify the certified financial statements for which sufficient information are available. If you don't have a justification, you are in for a problem. You have to have documentation to support that you have done diligently. There are two clauses in class 7 make it very clear. You should not be grossly negligent. You should have done sufficient due diligence. Without sufficient due diligence or either on gross negligence, you are in for a problem. This is the take-home message as far as the session is concerned. Code of ethics or disciplinary committee is not only for high-end issues. We presume that is only for cases like ILFS and Satyam. On a day, please, you can go through the institute's website. The code of ethics issues, there are umpteen number of issues being notified regularly. That is, there are so many benches available in the disciplinary committee. Each and every bench is full with hands. They are having 10 cases, 20 cases, hearing on each and every cases. 3 days in a month they sit. 30, 30, 40 cases are happening. All are small and medium practitioners. Day-to-day certifications are taken up. Day-to-day, you give a certification of turnover. On the basis of the bankers will give funding just like that. They will have their own problems with CBA, etc. But as chartered accountant is concerned, when you are certifying the turnover, you are supposed to justify with the proper GST papers. If you don't have a GST paper and you give a certification of turnover, you are creating your own vulnerability. PAN concurrent audits, there are lots of issues which are happening. 50 to 60% of the disciplinary cases are coming in concurrent audits. That's what the statistics says. Trusts and societies, there are lots of problems which are happening because it's a non-profit organization. Whenever a non-profit organization is being taken for assurance functions, please understand there are multiple members who are available. Whenever a dispute happens, you have to keep yourself away. I can throw classic examples when we meet any of you in person, whether these sort of things are happening. In a forum, this cannot be discussed. But trusts and societies is a dangerous area where we have to be very, very careful. Now, as you know, bank branch audit itself can trigger because of the reasons which I have already told you. This COVID-19, it still has continued relevance because COVID-19 has gone in 1920, 2021. Now it is not the case, which is reality. The problem is there. As far as COVID is concerned, stock, units not functioning, going concern, all these things are having serious problem. How do you safeguard yourself? CARO 2016 requires reporting under these classes. Class 7 and 8 are very, very dangerous. We are supposed to examine. Please take this off guard. Comply with the procedures given in para 7 of 501. Evidence. They give a paragraph that you please read it and examine. What is that it has to be done? In case of inventory valuation, please examine whether the inventory valuation is proper, fair and procedural. Whether the management has physically verified all these certifications you examine. Verify whether they have actually verified. On that basis, if you are not able to conclude, express your scope limitation. My scope is limited to the extent because as far as COVID is concerned, we are not able to verify this stock. Once again, inventory write-downs, purchase commitments, because whenever a COVID issue has happened, I am supposed to supply a particular machinery on a particular date. If I have not supplied, we are in for a problem. There may be some cases which has happened. You have to go to the contingent liability and give us a report. Same way, I would have given a commitment to purchase. I have not purchased to the extent because my production is not happening properly. Then also, we are supposed to have a computation, and accordingly, you have to make a necessary provision. Obviously, price variances will happen. These are the clauses of clause 2, 7, 8, and 6. Please ensure that these clauses will have an impact on what are all the points which are supposed to be reported. Of course, safeguard I have given to you. You go to that particular safeguard. Market demand conditions, postponing recognition due to, because whenever a company keeps on making income, etc., they keep on postponing the recognition of due because I am not yet completed the projects. This is going to be a serious issue. And next one is going to be very, very serious, going concern concept. Please examine whether we can follow this particular step. I have given a chart. You can go through that. Please assess if there is a significant risk of continued relevance of the organization. If the going concern is seriously affected, please provide the report in the going concern, threat of going concern, and ask them to make the assets and liabilities to be stated in the current asset and current asset liability in the realistic value. If they are not doing that, qualify. Particularly in respect of larger organizations, be very, very clear. COVID-19 has a continued relevance because at least 20 to 25% of the units have been closed down. So whenever they have closed down, we are supposed to ensure that the going concern is affected or not. If it is affected, we have to examine these two particular steps. And if there is a financial implication on that, please disclose that. And if they are able to provide for that, we are safe. If they are not able to provide, we have to necessarily give the substantial doubt rises. Going concern concept is very, very important in the COVID situation. Beyond COVID situation, even after the next 2 years, this impact will happen. Please go through that and give a report. Impairment of assets, similar to the inventory valuation, impairment of assets can happen because a particular unit which has not been functioning for 6 months, the assets would have been rusted, it may not be eligible for reusages, etc. You have to examine that and then give a report. Decline in value of investments. The company will be having investment in some other places. We are supposed to examine whether there is a decline in value of investments, whether the trade receivables are recoverable. Because as I told you, going concern concept of my client is affected. Same way, my client's customers also would have been affected. They would have closed the shop and gone. Those debtors may not be recoverable at all. In that case, we have to make necessary provision in the books of accounts. If provisions cannot be made, we have to necessarily qualify. As I told you, we are supposed to talk about this FRRB findings for a moment of statistics only. FRRB is in respect of large companies, but still they have given, these are the observations as far as the study on compliance financial reporting requirements is in. AS non-compliance is 76% of non-compliance is there. Schedule 3 non-compliance is 18%, which means it's very, very dangerous. That is also, this can trigger an action. Caro non-compliance is 6%, but revised Caro, it might be increased because it is related to third volume, which is 3 years old. Yes, there is a scanned record. There is no reporting at all as far as evidence, etc. is concerned. So my point is, what is possible to do is keep your representations in a proper manner. And the written representation is signed by all the directors or all the partners. Don't take representation only one particular person, or take from one person and take an authority letter by way of an authority which has been given by the board of directors in the particular board decision, particularly in respect of large companies. In case of partnership firms, please ensure that all the partners sign the written representation. Otherwise, you are in for a particular problem. And as far as bank statement is concerned, please verify the couple of months. Don't presume that you have gone through the 31st of March figures and closed it like they don't do that. At least for a couple of months, verify. Keep it as a working paper also, because you may be able to justify at a later date. I have gone through the verification at least for 2 months, and those 2 months there is no issues at all. So I presume that sampling is acceptable to you. Wherever you are certifying forms of ROC, for example, change of directors, removal of directors, etc., please ensure that you have all the papers to support you. Because once an audit director's resignation is filed or allotment of shares is filed, you are in for a problem, because the other party is affected. They go and give a complaint. We are in for a serious issue. Working papers you have to maintain for at least 7 years after any work is done. After any work is done, it is not. If a work is done for 2017-18 accounts, you are certifying today, 2017-18. From today, you have to keep it for 7 years, not from 2017, 7 years. It is not the case. From the day when the work is done, you have to maintain for 7 years. These are the various certificates we give. We presume that by giving a certificate, we are not having a problem. All these certificates have problems. First thing is regarding certification on capital contribution, closing stock, gross turnover, sundry debtors. All these things are serious problem, because wherever bank frauds happen, these the stock auditors are also pulled up for cases. Okay, and then valuation of various document, ROC charges, registration of charges. When you give a certificate without the assets properly verified, etc., you are in for a problem. Whenever you go for an IPO, we give a lot of certificates. IPO, that is SEBI, can raise an issue on you. GST. Whenever a refund is being obtained from GST in respect of exports, etc., you give a certificate without proper verification, you are in for a problem. These are the certificates we normally give. Day-to-day basis, we give these certificates. Statutory records are being maintained under the Companies Act, Transfer Pricing Act, utilization certificates, very, very important. Utilization certificates we certify in respect of all the NGOs, MP LAD scheme, MLA development scheme, all these things we give a certificate. Without proper verification of how the grant has to be utilized, how the money is being maintained in the bank account, whether it has been done in accordance with the grant's conditions, we are supposed to give and then give a certificate. And the format is also available very much in the certification format. Please go through that and then give a report. Don't give a report just like that. So, as far as code of ethics is concerned, there is no complication at all. There are 5 threats which are available. And once you consider the 5 threats and a work is not permitted, don't take. So make it very clear. If any of these threats are perceived, don't take it. When in doubt, see there is a possibility whether that can happen or not happen, then also do not accept. First thing is, if it is not permitted, don't take it at all, straight away. When there is a doubt, do not accept, better safe, avoid. And there is no doubt, it can be taken. Then also, when looks acceptable, yes, obviously we have to earn our bread, etc. But the point is, do accept and undertake with professional skepticism. This professional skepticism has been explained in Code of Ethics 2019. Please and go through that in detail. What do you mean by professional skepticism? It's a large topic which has been discussed. My point is, whenever a client is coming up with an audit and doing the audit report, etc., please understand that professional skepticism has to be there. Professional skepticism has to be looked at and examined and then only take up the audit, because you don't blindly go and take up the audit. Please examine whether that assessee is good, the other accounts can be taken up for the audit. Is there any issue with the previous auditor? Is the assessee legally compliant, statutory compliant? All these things are there. If you examine that and if you are comfortable with without any reservation against the company, then you can take up. Sir, you can very well ask, sir, in this situation, we will not be able to do the audit at all. Please understand, my dear friends, not doing the audit is one side of it. Doing an audit with a problem is another side of it. Doing an audit with a problem and ending up with a dangerous situation of code of ethics is a worse situation, which I don't want any of the members to have a problem at any point of time. With this final word, I thank you very much for patient listening, and I'm okay and welcome any questions from the members on this. Members listening the lecture. I think I have stood by my timings. Host, there is a question in the chat box. Is key audit partner notation mandatory for unlisted companies? If says there is, as of now, there is no compulsion, sir. There is no absolutely no compulsion for unlisted companies, but it is advisable to go for a partner rotation if you have multiple partners, because all said and done, you yourself may be familiar with certain things and you might not be able to find a issue at a later point of time. So it is better to have a rotation within your own organization if it is possible. Only one question. I don't think organizers. Is signing provisional of financial statements allowed as part of projections? Oh, lots of questions have come. Is signing of provisionals financials allowed as part of projections? Sir, it will not be as part of projections, sir, because projections is only in respect of futuristic year. Provision is in respect of a year under which it is under progress. Even though a small portion is considered as projection out of the provisional financial statement, it is not projection as such. There is a difference between projection, which is totally estimated for the previous for the subsequent years. So provision financials are independent certification. It is not part of the projection. But when you have 5 years projection available, in which you have, this is what probably the question of the particular member, there will be a first page wherein it is audited previous year, provisional for the current year, and projection for 5 years. You can certify, provided in the below the note, you can well mention, please refer the audit report for the compilation. That you will be obviously giving a audit report, whether it is under SAE 3400 or SRS 4410. That audit report, you have to refer it and then sign it. Then it is permitted. Can a member holding COP accept ESOP or sweat equity from non-audit client? The question is not complete. Basically, if the member holding COP accept employee stock options, it is not possible, because a member is holding COP. Obviously, you cannot be an employee. Once you are not an employee, obviously you will not be able to have an employee stock option, in my opinion. Whether it is non-audit client or audit client is irrelevant, because once you are holding a COP, you cannot be an employee of another organization. For non-audit function, you are giving an opinion, say, or giving an input that you are being paid without audit services payment. They are giving by way of a equity, sweat equity. If that is the situation, then it is also a consideration. It is basically a settlement of consideration other than cash. Other than cash, a settlement consideration. Once again, non-audit assurance, there may not be an issue, but still it will have its own impact by way of independence threat at a later date. But it's not an audit function, there is no problem. But ESOP, definitely it is not viable. It is not possible, because once you have a COP, you cannot be a stock option available for employee stock option. Can a member in practice do intraday trading in stock market without permission of the council? See, basically, this is more of a speculation business, if we can say so. But I have undergone one particular clarification given by the institute. As long as it is not considered as it's not the main business of the chartered accountant, it may be permitted. But it is advisable, if you want to do a trading activity, it's advisable to take a permission of the council and do it. If you are not doing it, in case of an issue, you might end up in a problem. As long as there is no issue, you can very well fairly go through that. But whether it is intraday trading or alternate trading also doesn't matter. Once you are into the trading activity, when you are preparing the financial statement, you have to show it as only capital gains. You cannot show it as a business income. Obviously, even though it's a trading activity, you can show it as a capital gains income only, because as a chartered accountant in practice, you are not supposed to carry on any other business, including share trading. Share purchase and sales you can do by way of capital gains component. It cannot be by way of a business. Even on intraday, it can be considered as a capital gain, provided you take delivery and then sell. If you don't do take delivery and sell it, it becomes a speculation business, which I am afraid whether it is permitted. It is not permitted. Can a member, can non-audit services fees exceed audit services for non-corporate? There is no restriction as on date. There is no restriction as on date in case of individuals, partnerships, and societies. Obviously, society, it will be a serious problem. But my point is, once there is a difference in opinion, keep yourself away from assurance claim. Once you are having an assurance function, keep yourself away from non-assurance functions also. Corporate, it is totally banned. Non-corporates, there is an element of risk which is available, so it is not advisable to do it. In case a company is picked up by the government and is being questioned about the legality of a business and legal battle is in progress, then it is possible to take up the audit. The existing auditor has resigned. Obviously, this is what I mentioned about the last point. When it is looking like acceptable, examine with a professional skepticism and then take up. If it's already picked up by the government and questioned about the legality of the business, just take an example of trading in Gutka in Chennai. Trading in Gutka in Tamil Nadu is banned. Gutka in other places is allowed. In Tamil Nadu, it is banned. Once a person is coming with an activity of Gutka trading, obviously, you are not bound to take up the audit. Not only from the code of ethics point of view, from your own moral point of view also, you are not supposed to take up the audit. Is there a restriction that provision of financial statement cannot be signed after the end of the financial year? Is it 31st of March? Because yeah. See, what happens is, it is not specifically mentioned that provision of financial statement cannot be signed after 31/3. The problem is, if you are signing after 31/3, obviously the figures are fully available with you. Why the reason why you have to sign as unaudited financial statements? And once you are going to sign an audited financial statement, when there is a difference between the provisional financial statement and the audited financial statements, definitely you are having your own self-review threat problem. Because once you commit yourself for a figure in the provisional financial statement, you will be under bounding yourself to certify the same figures without changing the methodology. So there is an element of self-review threat which will happen. So it is not allowed to sign the provisional financial statement after 31st of March. It is allowed in respect of not your client. If it is not your client, you can sign it because it is going to be a compilation report. It is not your audited financial statement, it is a compilation report. You can sign it for a different client. Any other questions? If there are no other questions, we can conclude. I will be transferring this presentation to the SARC. They will be able to circulate to all of you if you have shared your email ID with them.
Sir, am I audible? Hello.
Yeah, very much, sir. Please go ahead.
Sir, thank you, sir. Thank you for excellent session on code of conduct and professional ethics for CS, sir. And you will be sharing the presentation with us, right, sir? So we'll be sharing.
I will definitely send it across to you right away after the session. I will send across to SARCCP. From that, you can circulate to the members.
Sure, sir. Thank you, sir. Thank you for excellent times. Thank you.
Thank you very much.